Hello, I'm Marius Alexa. Welcome to this new edition of the weekly currency review here on Jitney Trade TV. Jitney Trade TV, the market information side of Jitney Trade. The presentation today is entitled Looming US Dollar High. I believe the greenback is sitting at some pretty significant resistance levels against the euro, against the Canadian dollar. I will actually show you some correlation in that respect with commodity markets, which in my opinion are closing into some type of low here. The idea would be that we do have a dollar CAD short-term peak possibly at hand. You remember that last week we were turning bullish. We were trying to tell you that that huge drop from that steep drop from the 130 to 115 was excessive and should lead to a rebound. We got it. Everything seems to be happening extremely fast at the moment, so that's why I keep coming all over again with about updates on about the same markets. Euro is kind of seeking direction, might have hit some type of short-term low, but depending on really what we're getting near the upper end of the range, we will make up our mind whether a more significant low has been established or which is just the rebound is part of a sideways fourth wave affair. And importantly, very importantly, Euro-Canada rebounding off the low end of the range and maintaining some upside potential for the weeks directly ahead. Also, the idea I will actually begin with the presentation would be that CBOT corn is nearing a potentially significant short to intermediate term low. Let's look at some charts here. So basically, in the corn, the decline from the 760, 780 area, displays a 5 down, a corrective bounce, and apparently another 5 down in progress, which is in fairly late stages of development. The trend, to be sure, is down for the time being, as suggested by the behavior in the relative strength indicator. But at the same time, we're seeing a positive momentum divergence and an oversold market condition that is typically conducive to some type of low. I would identify also that right now the corn is approaching equality between the two declining legs from the 760, 780 area, and it is basically biting on the previous fourth wave range of intermediate degree. All these are setups in the direction of a short to intermediate term low. I think right now we watch the 447, 471 area. That defends the immediate downtrend, and I think it would be typical to see prices eventually continuing at that lower from under those resistances to establish a pretty significant low, in my opinion, near the 310, 340. You should know that today I'm only showing corn because we really do not want to overextend the length in terms of time of this presentation. But there are similar situations in the energy markets, in the metal markets. I think the only notable exception is the gold, in the sense that, yes, it's still falling into a low like, all other commodities. But it's just that, the pattern falling into that low is a bit different than the one we're seeing in the oil, in the copper, and in the corn. And now back to our short-term business, short-term currency business type of thing. You recall, dollar Canada, we were indicating a bounce is due, 125, 127. We touched actually today the 124.5, dropped steeply. Now that we have tested, the 62% retracement of the move from 130 to 115, it would be logical to expect a return near 119, 120, and eventually 114, 116. I think essentially that this move is probably as short-lived, is going to be as short-lived as the previous steep drop was. We will really see, we'll really have an opportunity to see what is really happening in that the 119, 120, 114, 116 area, whether there's real bids, and we will probably find a floor in the vicinity of I would speculate 114.5, 115 and a half. In the euro, pretty much the same story. The daily trend remains down theoretically at this stage, but we have a bullish momentum divergence. I think that this approach of the 123.20 area was deep enough for us to consider it, perhaps a B wave within a larger fourth wave upward correction type of thing. I would use a rally above the 127.20, 129.20 as the hint that we are to retest and most likely be repelled at the 132, 134 area. Otherwise, a prerequisite for this to happening actually is that we remain above the 123.20, 123.80. If that is not the case, expect the final fifth wave low, much more important low, perhaps the best buying opportunity in 1 year, near the 118, 120 area roughly. And finally, the Euro-Canada, the discussion last week was that, the steep drop from the 163.5 area should not have a lot of juice left in it. And we were saying that a push above the 152.5, 155.10 would suggest that we got going again in the opposite direction. I think it just happened. I think that, prices actually turned up while momentum is still oversold. There's quite some fuel, in my opinion, left in this market, to the extent that we hold above the 147, 149 area. Our targets, I think, on a multi-week basis are going to have to be the 160, 162.5. And having said all that, friends, I'm going to wish you happy trading, all the best, and we'll see you next week. Bye now.